Okay, welcome everybody. Again, thank you so much for being here today for this panel co-hosted by Odyssey Energy Solutions and the Renewable Energy Association of Nigeria that we have been really excited about. Demystifying Nigeria's currency exchange rate unification impacts on investors, importers, and solar companies. My name is Elissa Chandler, and I manage communications and company operations at Odyssey Energy Solutions. Odyssey is an end-to-end solution to finance, procure equipment for, and operate distributed energy projects at scale. We have 2,400 solar companies on our platform and are facilitating over $1.3 billion of finance into distributed energy projects. A few housekeeping things before I pass the mic over to our moderator, Piyush Mathur. First of all, this session is being recorded and will be available to registered participants after. And second, there will be time for Q&A at the end, so please drop your questions in the Q&A box throughout the panel as they may come up. And without further ado, I'm passing it off to Piyush. Thank you again for being here.
Thank you, Elissa. Good morning, good afternoon, and good evening, and a very warm welcome to all of you, wherever you're joining from today. My name is Piyush Mathur, and I'm the co-founder and chief business officer at Odyssey. For those of you who don't know Odyssey, we exist to accelerate flow of capital into the distributed renewable energy sector to help the sector build faster. Why? Because distributed solar today is the fastest and in most cases the cheapest way to get power to people. So at Odyssey, we're accelerating this build out of the sector by helping ecosystem players, developers on one side and financiers on the other side with technology and data tools to plan, finance, build, and operate projects faster, and then also manage them efficiently using remote operations and management. We run some of the biggest concessional capital financing programs for distributed renewables through our platform for organizations like World Bank and country governments, including the NEP program in Nigeria. We also work with private financiers like Trine here in the webinar today to help deploy capital into deserving projects.
By way of opening remarks, we would like to appreciate both Desmond and Chandler
we have some background.
First, deliverable that was successfully delivered to the client last week.
Can someone please, everyone mute their mic, please? We have some noise in the background here. Okay, I was just saying that we run some of the biggest concessional capital programs in the distributed energy space through our platform for international investors like World Bank and country governments, including the National Electrification Program in Nigeria. And we also work with private sector investors. My own background is in finance, private equity, and distributed renewables. So any economic factors like this currency dissonance obviously catches my special interest. However, the idea of this webinar actually came by from many conversations that we had with local project developers on one side, but then also financiers, both within Nigeria as well as outside, who all expressed through us angst at the uncertainty that the recent changes and currency unification in Nigeria has created. Some see it as an opportunity, others see it as a step backwards. Yet others are saying that the dividends of democracy are ending. Either way, at Odyssey, we feel the pain of the developers, investors, and all of you who are itching to get their head around this issue and what are clearly some very drastic reforms. So here we are to demystify all this for you, and we're fortunate to have some of the most experienced and brightest minds with us today to help us peel this onion and see where all this is headed. So with that bit of background, let me just introduce to you our expert panel. First, we have Ayodeji Ademilua. Ayodeji is the CEO of A4NT, a leading solar company in Nigeria that builds mini grids, undertakes commercial industrial projects, and also installs solar home systems. In addition to his role as CEO of A4NT, he's also the president of Renewable Energy Association of Nigeria. And from that vantage point, he works closely with government, financiers, and businesses within the sector to find ways to increase the speed and scale of renewable energy projects in the country. Ayo has a long experience in the finance industry and has previously worked in different banks in Nigeria before he left Guarantee Trust Bank to pursue his entrepreneurial venture in distributed renewables. Ayo is a respected thought leader in the sector and observes all industry developments closely, including this one. So we're very pleased to have him between us to discuss this important topic with us today. Welcome, Ayo. Next, we have Anthony Odu. The best way to describe Anthony is that he's a serial entrepreneur at heart, but a financier by training. Let's talk about his training first. Anthony worked for over 8 years in the finance industry, serving at Bank of America, Barclays, and Lloyds. But then he followed his heart to build two ventures, one after the other, in the education and investment space, where he attracted capital from well-respected venture builders like Y Combinator. Today, he's a CTO, CPO, and co-founder of Verto FX, a business-to-business payments platform with a mission to simplify cross-border payments in emerging markets, particularly Africa. We're obviously very pleased to have him among us today because in him, we have someone who cares so deeply about currency and remittances that he has set up a whole business to solve exactly that. So welcome, Anthony. Next, we have Desmond Ogba, who's a partner in the finance, energy, and natural resources practice of Templars. Templars, as many of you might know, is one of Africa's leading law firms, headquartered in Nigeria. Desmond is an alumnus of Harvard Law School and Nigeria Law School, and has previously worked with top global firms like Latham & Watkins. Desmond has extensive experience advising solar companies, project sponsors, borrowers, banks, funds, and other financial institutions. He has deep understanding of the renewable energy sector, but also routinely interfaces with regulators and governments serving on different technical committees, including a multidisciplinary committee of experts appointed by the Senate. Desmond is consistently ranked in international legal circles among the most promising lawyers to watch out for, and has been repeatedly recognized by Legal 500 as a next generation leader in law. If you haven't guessed by now, Desmond is probably the brightest legal mind around when it comes to Nigeria FX market. So yeah, very pleased, Desmond, that we have the benefit of your experience today, and welcome. Next on our panel is Ayokanmi Aderibigbe. Ayokanmi is an investment manager at Trine. Trine, as many of you might know, is a specialist global investor based in Europe with a track record of investing across Africa, including Nigeria. Ayokanmi specializes as an investment manager in deal origination, structuring, and portfolio management. With prior roles as head of legal at Starsight, which is obviously one of Africa's largest distributed energy developer, and also a key member of the finance and projects team at Templars, where he was colleagues with Desmond. Ayo brings extensive experience and a unique and dynamic perspective to the panel, having worked across different spheres of renewable energy. In Ayo, we have someone who understands that sort of important intersection of law, finance, and solar. So great pleasure to have you with us today, Ayokanmi. Welcome. Okay, before we launch into our discussion, let's turn to the audience for a moment and see who we have here in the room with us. So, dear participants, you will shortly see a couple of questions come up on your screens. Perhaps you can quickly respond to them so that we can see who do we have among us today. Okay, hope everybody is able to see the poll and is able to respond. All right, I believe all of us have had a chance to attend to the poll. So let's get going. Elissa, is there a way we can see the results right away?
Yes, I will share the results right now.
Okay, so we see that approximately half of the attendees are renewable energy companies in Nigeria. That's great. This is obviously a very relevant topic. And then interestingly, we also have a fair mix of investors, both from within and outside Nigeria. So that's great. Excellent. Yeah, welcome all of you again. And let's dive straight in. Okay, so my first question is to you, Desmond. Let's start from the beginning. What was government's rationale behind maintaining an official exchange rate that over time became so divergent from the market rates that it sort of created a host of problems? Can you fill us on the history, please?
Thank you, Piyush, and to the REN for putting this together and for inviting me. I think as almost all of us already know, until about 2 months ago, Nigeria used to have multiple exchange rates for different purposes. We had the rates for oil marketers. We had rates that the CBN rates, the Central Bank of Nigeria rates, that was used for government contracting and other public expenditure purposes. We had the investors and exporters rate that was used by investors and exporters in the official markets, and where the prices were supposedly driven by market forces. We had the Bureau de Change for those ones who were allowed to sell foreign currency for small scale end users. You had the pyro market where you could buy money across the street for different reasons. And you also had the central bank intervening from time to time through what it called its secondary market intervention sales, where it intervenes to sell foreign currency directly to either end users or authorized buyers, banks, etc., who then unsell that money to the end users. So these different markets always existed, and that sort of distortion in the markets caused confusion among stakeholders and investors who were very concerned about the multiple rates that existed in the market. Now, as to the rationale for these multiple rates, as far as I can remember, over at least the last 2 decades, which my own memory serves me, Nigeria has always had always had 2 exchange rate systems. The first is the central bank controlled rates, or the fixed system, and then the parallel market rates. The difference between what's used to obtain then on what we started seeing about 7-8 years ago is the fact that the exchange rates were slightly comparable. The difference or the margin between the 2 systems were somewhat negligible. But the trouble began when the economy slumped into recession in around 2016, and the currency challenges exacerbated in Nigeria. So following that, what the central bank did as part of its intervention was that it created different windows for various segments of the economy. And according to the central bank, the multiple exchange rates were created because it was necessary for economy that was badly for a crisis. And that's when an economy is in crisis, economies are known to have preferential rates for critical sectors so as to meet the demands of those sectors and keep the economy afloat. So if I would join the central bank, if I will agree with the central bank, I would say that the first reason for that sort of multiple rates that we had was the need to incentivize critical sectors of the economy that would otherwise struggle if they did not get effects at cheaper rates or rates that are not necessarily market rates. That would be the first reason. The second, I would say, is the need to manage inflationary trends for certain products by providing FX subsidies. Nigeria remains an import-dependent economy where the input prices for most items are based on foreign currency. And so floating the naira would have meant a free fall of prices, and that could be political suicide for any government at all. And so it made sense to continue to control the rates in that manner. So for the central bank, for instance, would always make money available to oil marketers at cheaper rates in order to help them keep the prices of petroleum products low and avoid that skyrocketing of prices that could have reprisal effects in many ways. Now, with the deregulation of petroleum products prices in Nigeria, that regime seems to have ceased, and that might no longer be of much importance. Related to that point, I think the third and perhaps the last point I would make on this is, I suppose the last point is political goodwill. The government probably believed that by sustaining the exchange rate at a particular level that is not determined by market forces, it could gain or sustain political goodwill. For instance, the Central Bank of Nigeria would sell foreign exchange to those bureau de change that I talked about at certain fixed rates, and then dictates to those BDCs the rates at which they could sell money to the end users who needed that money for their tuition, medical expenses, travel allowances, and some other small scale needs that BDCs are authorized to sell. So in terms of the history, these I think are some of the key reasons why the government wanted to hold the prices steady by not allowing the unification of rates until we saw that change a couple of months ago. Over to you, Piyush.
Okay, well, thank you very much for that perspective. So in summary, I think what we should understand is that since Nigeria is an import-dependent economy, there was a desire from the central bank to, one, conserve foreign exchange and reserve it for critical imports, but then also incentivize certain sectors of the economy, thereby also helping manage inflation. But then over time, it also became a sort of matter of political goodwill before things started to get out of hand. Okay, well, thanks for that perspective. Ayokanmi, let me turn to you. You are a foreign investor who is deeply interested in Nigeria, have already made investments in Nigeria. How did you, as a foreign investor, view the regime as it existed before the recent changes? I'm quite keen to dig into this historical context, because all of it will then inform whether we should see the changes that we have just experienced in a good light or a bad light.
Thanks, Piyush. I appreciate the opportunity to speak on this panel. As Desmond said, even though the Nigerian government had very good intentions in upholding a multi-rates foreign exchange markets, as a foreign investor, we could only receive the negative sides, of that market, because that market was, plagued with several problems. The biggest were the volatility issues and the liquidity situation. I mean, the liquidity situation was so bad at some point that we saw borrowers in the market who had to, service their debt obligations to their lenders using their offshore DSRA accounts. What that meant was, for us as an external investor, it meant that technically there was a very significant and high risk of defaults on the part of those borrowers, right? Not because they didn't have the money, not because their business wasn't doing well, but simply because they could not access FX at the official exchange rates, right? Some of them had been queuing on the markets for close to 6 months, 8 months, and they still can't access FX. And then at the last minute, they come to us as a lender for, approval to access their DSRA, which is a very odd thing, which you rarely see in most markets. So that was a major problem. Right now, things are getting better, which is one of the good positives of the new FX regime. But that old regime was so problematic that it sort of made foreign investors lose confidence in Nigeria as a market. Those who were doing deals in Nigeria were doing deals at a significantly high cost, right? Compared to other markets in the world, the interest rates for international financiers in Nigeria is significantly higher, right? And that's one of the key issues that sort of affected the rates. It's the exchange rate problem, because the biggest fears of most lenders today, including ourselves at Trine, is there a risk that our monies will be stuck in Nigeria and we will not be able to repatriate despite the CCI regime? Right, that's the biggest fear of every lender. Right now, even with the volatility issues that has occurred over the past years, more recently, within the past few months, we've seen companies, borrowers who are good companies, who have lost about $20 to $50 million in realized and unrealized FX losses. That's very significant.
My goodness.
Yes, so it means that if businesses are losing this much money, their profit margin reduces, and their ability to debt service also becomes highly diminished, right? And for us, it's a bad indicator. It's a negative, and it just sort of makes us lose confidence in the market, right? So regardless of what the intentions of the governments were, the impact was very negative and very discouraging for us in the international markets. Over to you.
Yeah, I mean, you've made me realize, as you were saying this, that I think the biggest loser was ultimately the consumer of electricity, because if the lenders and investors have to charge high rates to mitigate this exchange rate problem, then many projects which would otherwise be completely viable are now rendered unviable and don't actually see even nail dig in the ground because of this problem. We have artificial economic stoppage here. This is most unfortunate. But you still managed to invest in Nigeria, even in that older regime. So what was the sort of transactional experience? Let's sort of set aside the underlying economic problem, but in terms of the procedures and how to sort of first convert currency into Naira and then repatriate the gains or any dividends, how was that experience for you?
I mean, it was very tough, as you can imagine. There is no easy answer to that question. We tried different things. Considering our target markets, it means that our deal sizes are much smaller, and we couldn't afford to make the deals super expensive, because then it becomes very unattractive. So we tried multiple options. We tried edging the exchange rates. That was too expensive at the end of the day, so that couldn't work. We tried to work with local banks to sort of provide local currency financing options. The deals took too long to close, ended up also being very expensive for the borrowers. So at the end of the day, what we had to resort to were very, very complex legal structures, which sort of was a multi-pronged approach. We first of all, from the deal origination perspective, looked out for the best borrowers we could find on the market, who had very good watertight contracts that were very sensitive to exchange rate movements, or at least price movements as such. So that way, even if there's a significant shift in exchange rates over the next 6 months or 1 year as tariff changes, we're able to sort of, the borrower is sort of able to recover, right? So we had very stringent DSI requirements. We had borrowers lock up cash offshore, right? Just so that in the event that there's a liquidity event in the market, we're able to sort of be in a situation where the borrower is not in default automatically. So it was multiple structures. We even at some points only considered borrowers who only had foreign investors in them, because that means that at the end of the day, if there was a situation in Nigeria, those foreign investors can inject liquidity and service the debts of those borrowers, right? Those were the sort of structures that a lot of international investors had to resort to sort of invest in Nigeria, right? So what that means is that for the average person who sets up a renewable energy business in Nigeria, who doesn't have foreign backing, right, or who doesn't have the resources, it means that they cannot access foreign financing, unfortunately. And the cost of local financing as well is very prohibitive. So it was a big problem, but we sort of had to do it, but it was not the best approach that we have adopted, right?
Ayokanmi, you again made me realize that it was so bad that it can only get better. Any change could only get better.
Absolutely.
If I sort of sum it in a sentence. But let me turn to you, Ayodeji. You are a developer yourself. You are also the spokesperson for the industry. In that latter role, you interact with a number of local developers and understand their pain. What type of pressures and challenges did this old policy create in the system? And where would you say the sector was or is as a result of these changes? Where could we have been and where are we today as a result of the sort of previous exchange policy?
Oh, thank you so much, Piyush. I totally agree with what Ayokanmi has said. He painted a picture very critically fairly, and we are indeed in peculiar times right now in Nigeria. So just as I said, they were able to do those types of models of lendings that they did, and that was what we had. So for the developers, what we had in terms of the type of regime we had before for FX rate was really very delicate. So it made a lot of developers not be able to access the kind of fundings they would have accessed, internationally. This new regime and this new change we've experienced a few weeks back, for me, I believe that in the short term, it's really going to really be tough, because we're experiencing a lot of volatilities and fluctuations right now. But I think in the long term, it's going to be the best for us, because I know one of the issues that the foreign investors had also before was that they believed that the Naira rate was a false rate, in quote. So they believed that the value of Naira that we posted right then was a false value. So they had a lot of caution that had to be exercised in order to be able to lend into the industry. But floating it and this new value we're trying to find, because I would call it trying to find, because where we are is not the value. So we're still dancing up and down trying to find the right value. But I believe once Naira finds its right value, without the puppeteering and without the covering and all the stuff, it will create a lot of more confidence, in the foreign investors, because they would know that this is a market-driven rate. So many developments that we've been having in other countries had been because the rate had been market-driven, and Nigeria rate has been a masked rate, masked with the kind of interventions and puppeteering we've been doing. So in the short while, it's going to be really very tough. It's been tough. I had a conversation with one of our members yesterday, and they were almost like, whoops, how are we going to go about this now with this rate and with this volatility? I mean, we're having changes within 3 weeks, about 4 or 5 changes within 3 weeks. And it's crazy. So, but we believe that once we're able to find the real rate that can stand the test of time, that's market, driven and market proven, then the investors can plan with that rate.
Yes.
Because a lot of the de-risking factors that were the risky conditions that were taken before was because they couldn't plan with the rate.
Yes, but Ayo, from you, I want to get a sense of the scale of the problem. Can you characterize for us where would the distributed renewable industry have been if this exchange problem did not exist? What is the sort of underlying genuine potential of the country? And where exactly are we today? Are we 5% of the distance there? Are we 50% of the distance there? Are we 90% of the distance there?
You don't want to imagine the kind of potential that is in Nigeria. It's massive. So let me take you from the top. So from population side, we've got 200 plus million. We kind of say that we have about 55%, or that is off grid right now. So we're at about 100 million. I'll put it that way. That is off grid. But the truth we have is that when you look at it from that side, then you come back to what we currently have in terms of generated power and what we're supposed to have in terms of power per capita. So we currently generate at about between 12 to 14, and we distribute between 3 to 5. We have stranded assets between 8 to 10, right now. But in terms of what we're supposed to have between 60 to 100 gigawatts. So even if we have the whole 13, 14 distributed right now, we're still about 64 to 84 short. So, and we have high potentials of unserved, high potential market of, underserved, So for me, I think we only have maybe roughly about 10% that is fully served. So we have 90% unserved. So the market is huge. The people are willing, but the inflation is knocking down the purchasing power for them to have distributed renewables energies. So there's a need for us in sector to find the de-risking means, but if we're able to get the de-risking means and we're able to get the rate right and some other economic factors provide, we have greater potentials in this market called Nigeria.
Yeah. Okay, thank you. Well, exchange rate obviously is not the only thing which drives solar development, but has been, as we just heard, a very significant barrier to growth of the sector. Whether that number is 10% or 20%, either way, it's extremely low. And I think collectively we should be all disappointed where we are sitting today. But anyway, enough of history, but I think that history is important to understand the scale of the problem and why we are even talking about today, why hundreds of us have gathered today to talk about this problem. But let's now turn to the current. And Anthony, I want to come to you. You run a currency conversion platform and a conversion business. Let's hear from you. Why has the government unified the rates now? So it sounds like there was pressure in the system, but why specifically now? Is it part of a broader economic reset that the new president is trying to achieve, including removal of fuel subsidy and all, or is it like a standalone measure? How do you see it?
Thanks, Piyush. From my point of view, the reason they're doing it right now is because they have to do it. It's almost like it's a given. If you think about it, the official and hourly rates have not been really unified. There's still a premium between what the official rate is today and what people are actually buying in the hourly market. So personally, we think that that's going to continue for foreseeable future. Hopefully, it will kind of go back to where it was, as Desmond mentioned earlier, when back in the day used to be like 1 hour difference between the official rates and the hourly rate, where people are not really bothered. So for us, the reason why it's happening right now is very simple. There are multiple reasons for releasing the official rate, including like the fact that there's a pressure on the foreign reserves and the fact that the pegging currency is very inefficient. So ultimately, the intention is to create a more transparent effect for investors like Ayokanmi to come into the market, knowing that when they actually invest into the country, they can repatriate their money without any problem. Every currency has volatility, but in situation like Nigerian rates not being what you call official or not being unified, it means that you don't know what you're going to get. So you can go in there, invest in something that meant to give you 20% return. By the time you actually repatriate, you're losing 20% because the market has moved multiple times. And we've seen a good example of that over the last maybe 18 months, where the rates have literally doubled in price. Why now? I think for me, it's probably one of the main election campaign for President Renewable. So he obviously campaigned about it. So he had to do something, which is one of the reasons why it was one of the first things that he implemented as soon as he took over the office. And in addition to the fact that the foreign reserve is dropping at a very intolerable rate. So whether they like it or not, something had to give. And if it's not done right now, it's just going to get worse. So your last question.
Sounds like it was a ticking bomb, which had to be arrested, which made it its way into a political manifesto. And then the current president has done well to execute on that manifesto.
Exactly. It's a ticking bomb. And when you think about most countries that today actually export crude oil, like in a country like Nigeria, they make that money and that money goes back into the economy. In the case of Nigeria, that money is never really going back to the economy because a lot of subsidies were going on where people don't pay the right price for the oil or the crude oil that they're buying. So one of the campaign from Tinubu as well was to obviously, one of the implementation that I did was to remove the subsidies, which is meant to be the fuel subsidy removal is one of the parts of comprehensive overall of the Nigerian fiscal policy, right? That policy is what's been problem for the last maybe 7 to 10 years. The policy on how do you manage your foreign reserve, how do you manage your effects, and so on. So while there are no concrete plan on how these savings will be disbursed from what we've seen so far, it is clear that they need to do something for the industry and infrastructure players to actually trust Nigeria, and also to hopefully attract more new investment from the foreign direct investment, and which will hopefully should release the pressure on the inflation and hopefully another problem as well.
Right. So what is the situation on the ground today? Can a willing buyer and a willing seller transact and convert currency at a sort of market price?
Yes and no, not entirely. So there are 43 item rule that passes in the official window, whereby importers and exporters of certain goods are restricted from accessing the official rates. So those people are not able to do that. So for them, it means that you obviously can go into the to your bank or go to any of the providers of FX. If you have items that fall into that rule, you are not able to do that. So the answer to that is no. But also, if you don't fall into that 43 item rules, you can obviously have a willing buyer and willing seller. So if the CBN chooses to reduce the amount of USD that are willing to offer into the official window, there will be additional surplus of willing buyers and sellers.
I mean, this group is about solar companies and developers. So what about solar companies? Are they allowed, not allowed? What's the position with respect to them?
I think probably that's a question for Ayo. I'm not sure because it's in the gray area. Are you guys allowed, Ayo?
Yeah, we're allowed. Yeah, we're allowed.
Okay, well,
yeah.
let's raise a cheer on that. Some good news. Good. Okay, thank you very much, Anthony. Appreciate. Desmond, I want to come back to you. Again, 50% of the attendees in this webinar are solar companies in Nigeria. So very keen to understand from you, what do these changes imply for local solar companies who have two types of needs? The first need is that they need to raise capital, and one source of capital is from outside the country. And the second big need is they have to buy equipment. And again, many equipment suppliers and OEMs are outside the country, so they'll have to pay in US dollars. So can you dissect this for all the solar developers in this webinar, that what exactly do these changes mean for them?
Okay, first is to take it from where Ayo stopped, what he just said, is the fact that renewable energy companies are still able to access the markets. The first three item rule does not apply to you, and so you can also access the market for your needs. Now, but before now, solar companies that are seeking to purchase equipment were at least theoretically able to access FX at somewhat cheaper rates through their banks for the purpose of such purchases. And I said theoretically, advisedly, because we know that in practical terms, FX was hardly available at those rates. And in some cases where they were available, it took much time to come, or the companies never actually got the amount of FX that they needed. And as a result, alternative and more expensive sources for the entire amount or for the shortfall. But with the unification of rates and the introduction of the willing buyer, willing seller system, it means that even with that theoretical option, that option is out of the door. That theoretical option is out of the door, because local solar companies may now experience higher costs in purchasing or importing solar equipment for our accessories for their needs. And that is because you would see that while the international prices may not have changed, you will now need more naira to access to purchase that equipment. Because and so if you are unable to, in practical terms, you will see that there are inflationary trends because of that unified rates. And so how do you deal with that? It is a question of externalizing that cost to your consumers, or being able to increase your prices as much as possible to help you generate enough to deal with the situation.
But as now, you said in terms earlier, of yeah, as you said earlier, I think this was only a theoretical benefit, which was only available previously to a few who could access US dollars at the official rate. Almost everybody in the sector was having to basically buy dollars at market rates anyway. There may have been exceptions, but I suppose the question is that, yes, there is a seeming loss to a few who previously were able to access privileged rates through CBN, but does the greater predictability and uniformity introduced by the changes outweigh the theoretical losses that solar companies may be facing now because the Naira rate has gone up?
No, it certainly outweighs it. The only thing that one is required to complete that loop or complete that balance is the availability of the FX even in that market. So you would find that if the unification of the rate is not in itself, does not amount to liquidity in the system. So that the unification only deals with the pricing issue, but it does not deal with the liquidity issue. Liquidity may continue to be a problem unless we find that there is sufficient inflow of FX into the system, or the central bank decides to open its vaults to intervene from time to time in order to make FX available in the system. Otherwise, you would find that that pressure would continue to move to the parallel market, and that market itself is, from what we see in the news, is beginning to dry up.
Right. Okay, so that's like buying US dollars to import equipment. So that's one type of an impact. What about raising money from international sources?
So in terms of raising...
Conversely, you can also speak from the investor's perspective, international investors' perspective, who, as Ayokanmi previously mentioned, were sort of holding themselves back because of all the problems. Should they now feel more encouraged? Is there an easy route for them to deploy capital into Nigeria and then repatriate dividends and gains?
Okay, so in terms of raising capital for foreign denominated loans, you will see that the solar companies or the renewable energy companies that whose earnings are mostly in Naira will find that the gap between the Naira and the dollar in servicing their loans, right, at unified rates will make foreign loans more expensive for them. That's a given. The same rule as it is for the equipment. Now, for persons who are looking to invest in Nigeria, it means that in the case of equity providers, and I would like to talk about the equity providers and the debt providers. In the case of equity providers, you would see that with less USD, you are now able to get a higher stake in the local companies upon conversion of your investment into local currency if the investment is priced in local currency. So you get a bigger piece of the pie. This is different from what would have been the case if we had stuck to that fixed exchange rate that was less than market. Now, for foreign currency debt providers, not much would have changed from their own perspective, because their loans are denominated in foreign currency and are repayable to them in foreign currency. So unless, like I said earlier, the borrowers are able to increase their revenues through cost externalization or by increasing the prices for their products and services, we may be in a situation where you would find that those lenders may be concerned because their borrowers may not be able to fully meet their debt obligations to them, because there won't be enough Naira for them to convert into USD to meet their more expensive USD needs that they would have taken from the foreign investors. And so, in terms of
as a practicing lawyer in Nigeria, what would be your message to Ayokanmi in trying? Feel more encouraged now, or tread with caution?
I think I would say you feel more encouraged to bring in money. The idea, the long-term effect of this unification is that we will see stabilization of rates, and that we may also begin to see more people inject money into the system. And with more money in the system, more liquidity in the system, the sort of concerns that Ayo described earlier, where people were on the queue for several months to get FX, will gradually begin to disappear. So that if that was a big concern for you from a currency perspective, we expect that to fade over time. And for the investees themselves who are concerned about the rate of the exchange, if we have if there is sufficient liquidity in the system, we'll also see that, the president of the association spoke about, said earlier, we will find that the Naira will find its level and things will normalize over time. So I think both from the investee's point of view and from the investor's point of view, if this policy is implemented as it should, and we begin to see its gains, it will work well on both sides.
Fantastic. Well, very encouraging to hear that. Let's go back to our foreign investor here, Ayokanmi. Is all this discussion giving you any greater comfort? What are some of your sort of continuing concerns or lingering concerns at this point?
Thanks, Piyush. I mean, it's comforting to hear everyone speak about about this issue and hear different perspectives, we're still very, very concerned, right? So we're very hopeful, and we know that ultimately the unification eventually would lead to increased availability of foreign exchange in the market. So we would have more liquidity in the markets down the line if things are well implemented, but it doesn't solve the volatility issue, right? And right now, from a volatility perspective, most of our investees are out of the money, in the sense that right now, having to convert their debt obligation from USD into Naira, for instance, right? Now they have an increased debt obligation. Someone who initially would, let's say, have, if we had given them $1 million at 460, that was 4.6, 460 million naira. Right now, that same obligation has automatically become about 760 million naira, right? Which is very, very significant within the space of 2 to 3 months. So except they are able to increase their revenues, as Desmond has described, if the solar producers increase their tariffs or whatever it is, they would not be able to service their debts, right? So that for us is still a very, very huge concern. How do they bridge this gap? There's the increasing interest rates in global markets. So it just makes foreign investments in Nigeria still very, very tough. But we're hoping that over the next few months and maybe over the next few years, both the volatility issue and the availability issue will become a thing of the past. I mean, at least from the trend in the market today, from the new administration, we see that they're doing a lot of good things that seem to be steps in the right direction, as Anthony has described, the removal of the subsidy of petrol, and all of these things that they seem to be doing. Those are good policies that signal a positive trend down the line, but until all of this crystallizes into positive gains, it's very, very tough to still decide on what's going to happen in the Nigerian market. So we as foreign investors will remain cautious until we see actual positive change.
Okay, so what I'm hearing you say is that over the medium to long term, you are positive, but you recognize that there will be some challenges in the short term as the changes stabilize and the volatility sort of goes away. Okay, that's fair. Yeah.
Thanks.
All right. Well, Anthony, back to you. What changes are you seeing in the work that you with your clients? I know you work with a number of solar companies in Nigeria. You also work with a number of international investors. So what are you hearing from your both types of clients, investors as well as solar developers?
Yeah, a very good question. I think just to pick back on what I just said, like long-term view is very positive, but short-term is not, because when we look at the turnover in the IE window today, which is one of the key indicators that we use to see how the market is moving, the volume are extremely low compared to the power market. So we believe the CBN, they will be forced to kind of intervene. They already done that, I think 2 years ago. They came in and basically enforced maximum price of, I think, 800 Naira. So if you will sell in the IE window, you can sell above that price. And that is something that you can use for a short-term period. But even after the implementation of that new strategy, we saw straight away that there's a volatility in the market of at least 50 points movement daily on the FX rate. And then what's happening is that as they continue to maybe attempt to almost implement different measures to control the official windows and blocking like price above 800 and so on, for me, we almost going back to where we were before, which is like, okay, the rate is at 360 or it's at 460, you can't sell above it, because the real problem isn't necessarily the rate. The real problem is lack of liquidity, lack of enough investment going to the country. And if you have more investment coming in and people are very confident in the market, there's a customer sentiment that, okay, I can get my money out at the right time and so on, you will solve the FX fluctuation or the rate in general. But by just fixing the rate and not having money to back it up, nothing, there's not much going to happen, right? So for us, that's what we're saying. The trend hasn't changed. The guys that still need to purchase for FX to pay their vendors or suppliers, they're still doing it, but they're doing it with measures, right? For example, when the volatility is very, very high, it's almost like no one wants to stay in the market. Everyone just kind of leave the market for a while. And then as soon as it kind of becomes more steady, even though the price might have gone up, they come back, because whether you like it or not, you still have to pay your suppliers, you still have to pay your vendors. So the real people that are actually going to have the impact are the end client, the consumers that have to buy the goods or services that are coming from those investments.
Yeah. Anthony, you make an important point that the foreign investment has to come to offset the outflows. And unless that fundamental mismatch is solved, this currency problem will persist. Are you then suggesting or anticipating that any further regulations will be introduced by government to supplement the changes that have already been made, mainly to encourage foreign investment? Looking at the direction of travel of policy, is that something that you're expecting?
I think the direction of the policy, like I said, are very positive. I think what's happening is a lot of people are waiting in the background for 3, 4, 5 years to see this policy actually take effect, right? And most of this policy, you're not going to see them straight away. For example, the money that's coming from the oil, like the impact will not be seen straight away. We talk about 6 months to 12 months to actually see that impact on the economy. So our long-term outlook for Nigeria is, like I said, is very positive. But the prospect of a stable, more freely floating currency that we all hoping to get, hopefully paired with like reinvestment or investment to the economy, is something that it would definitely pay dividends, but isn't going to happen anytime soon. And I think we also have to accept that that's the case. There's no short-term fix to this problem. In the long term, I'm very positive and confident that we will see if border policy and those implementation actually take effect properly. So for us, that's number one. And the second thing is, Nigeria as a country, we have to reduce the stress on the FX reserves, because that's what's been used to kind of come in and backstop some of those problems over the past few years. So if you don't have to rely on that, which again goes back to my problem, my solution earlier about increasing liquidity into the country, allowing investment to the country, find different means where foreign investors, remittances, all those people that normally actually can buy something and pay in dollars are doing it freely without any restrictions, then you get more or less stress on the FX reserves. And that's very going to be very important in the long run, because as a country, you're never going to solve all your problem in one go. And I think that's what a lot of people are expecting. It's not going to happen in one day, but it will happen eventually, as long as we keep to these fiscal policies and actually implement them properly with the right people behind the scene.
Yeah. Okay, Ayodeji, you again interact with a lot of developers. You sort of deeply think about their interests. Are developers perceiving this as a favorable change? Sorry, can't hear you. I think you're on mute.
Not from right now. The developers are not perceiving it as a favorable change because it's tougher. Just like Ayokanmi said, it's a bit difficult to you watch your balance sheet shrink in Naira value just before your face within 2-3 months. It's unbelievable, and you want to, for some of the importations that we're doing in terms of equipment and in terms of product, it's not really a huge change because we've not really been able to access FX from the right window. We've all been accessing FX from the parallel market. So for us in that view, it's just about like a 15%, or thereabout, or change, or 20%. So that's in terms of what it is kind of being. But in terms of for investment, it's a very huge difference. It's a huge difference on the balance sheet terms. So the developers are kind of timid to get foreign investment right now for the fear of what it will do to them. And whether you're trying to do equity investment or you're trying to raise debt investment, you're kind of being careful, because if you raise equity investment, just like Desmond said, you're giving off some kind of huge chunk of equity by the denomination of your balance sheet as Naira. And if you're doing debt, you're also afraid that, if you've not been in the regime of really doing FX at parallel market a lot before, your projects are not like products, that you've been importing and selling like solar home systems and all those stuff. And they're like, you're running mini grids of power plants where you're with tariff that you can't really increase, like Ayokanmi said a lot. It's going to be difficult. But if you're in the products regime for the solar home systems, distributors and installers who've been in the regime of the parallel market, the difference is not so much. But for investment, it's a lot, because you need a lot of Naira now to be able to pay back this investment at a USD. Yeah.
Okay, so obviously there is a short-term or other immediate restatement problem because of the change in exchange rates, which is a pain that everybody has to live through. But talking simply from a currency point of view, what ways would you propose for the government to incentivize the sector? Because the sector plays a very critical role in Nigeria's energy transition plan. So on one hand, you have this imperative of achieving energy transition, but on the other hand, you have this problem, again, created by policy, which is not letting that infrastructure build. So as an industry observer and as an association, what is Rayan thinking about representing to the government in terms of what positive or immediate relief type of changes the government can introduce to alleviate this pain and allow the sector to move forward?
Yeah, so we're trying to advocate for some kind of demand side subsidies. Subsidies also that could be felt from the origination of transactions and also from importation, like having importation duties waivers. And even if you can't waive fully, can we have a kind of reduction in the import duties on renewable energy assets, reduction of VAT and all other excess duties. Then we're also trying to fight for some tax waivers and deferrals. We've had some of them in the policies of the government before, but they've not been implemented as it should, because the way it is if we have those ones implemented as they should, they could make up for the kind of losses that we're currently experiencing, from the FX. So if we have some tax, deferral, and we have some importation duties waivers and other sorts of support like that, it can help us to protect from, increasing price in the time of inflation, and to deliver on the energy transition objectives that we're trying to do.
Okay, good. Well, sounds like we've had a full discussion about the history of where the problem originated from. And then we understood the changes and what they actually mean for different players in the sector. And we're now talking about, okay, where is it going to take us? Feels like the right moment for the panelists to take a pause and then also invite questions from our esteemed audience. So participants, please keep sending your questions and we'll take them up one by one. If you have a specific question for any specific panelist, please mention that in your question, and then we'll put that question to the specific panelist. All right, so we have a question here from Obina Agbu. Thanks for this webinar. If investors' concern border around FX, hedging of debit financing and FX volatility, can investor OEM direct financing and hedging through local banks with the developer consent help? Who wants to take that? I'm not sure if I fully understand the question, but does anyone here feel like they want to answer it?
Well, I guess I was trying to look at a model where, the investment can be routed through the commercial bank and using the investment as a back-to-back security or collateral for a release of local currency loan so that returns on local currency and preservation of dollars.
Clever idea, yeah. I suppose this has a commercial side to it and a legal side to it. Ayokanmi, you want to take a view on this? Does this work for you as a foreign investor?
Yes, it's it's an option, and it's a very viable option. However, I mean, for the specialized lenders who are very involved in, equipment financing, and that could possibly work for them. At Trine, currently, we don't offer equipment financing, but it's something we definitely want to look at in future for markets like Nigeria, right? Because what has been proposed could potentially work, where you can collateralize the assets that will be imported, and then you have a local bank who holds onto the assets on behalf of you, the foreign lender, and then you sort of provide the financing directly to the OEM. So it's something that could potentially work. I know that there are specialized lenders who offer this service. I believe Odyssey has some sort of short-term financing solutions itself.
Yes, now that I understand the question better, I was going to say that actually at Odyssey, we're doing exactly that, which in some ways circumvents the problem. It's not a complete solution, but yes, it's happening in the sector. And there is legal grounding for this as well, in the form of the certificate for capital importation, which actually can be obtained on the basis of a contribution of equipment as opposed to contribution of hard cash and capital. So yes, this is a very viable route. And Ogana, thank you very much for bringing it up. Great question. And yeah, that's certainly a route which should be pursued more. Okay, next question from Bernard Mika. Did any investor in the sector use the new gold ETF to repatriate funds via Johannesburg? What was the haircut they got? I repeat, did any investor in the sector use the new gold ETF to repatriate funds via Johannesburg? What was the haircut they got? Sounds like a very funky, circuitous way of getting money out, but if anybody has experience of this, then please comment.
We haven't done this at Trine, and I'm not aware of anyone else in the market who has done this, but I mean, I'll let anyone on the panel, if they have experience of this, to allude to it.
Anthony, have you come across this?
No, not personally, not this one, but I've seen where people try to use euro bonds in the past to repatriate as well. I'm not aware of what haircuts or what the prices are, but I know there's a different exotic or structured way you can get money out, but you have to know what you're doing as well, because yeah, if you get it wrong, it could be double whammy. So no personal experience on that.
Desmond, do you want to comment on this? Any legal aspects surrounding these type of structures?
It is not something that I have seen used, but I've seen people try to repatriate funds using other instruments other than. So I have talked about settlement in Eurobonds. I've seen that happen. I've seen people swap in equity markets, swap things in dual listed businesses by crossing trades on different exchanges. But I haven't seen this particular renewable ETF being used in particular essence.
Okay, well, let me also check with Ayodeji if you have any experience of this.
No, I don't.
Okay, Bernard, your idea is very exotic. I think if you have more to share, then people here will love to hear more about it. Okay, next question from Kayode Odukoya. Given high percentage of solar products and equipment coming from China, I would have thought the Naira for yuan swap policy agreement signed by the immediate past administration, if pursued, could provide some succor. Where are we on that policy? Desmond, this is probably your wheelhouse. Are you aware of where things stand on that yuan Naira direct trade treaty?
Yeah, so I know that has been used. I wouldn't say too much, but it has been in use sometime in 2021 when that deal expired. The central bank again and China and the People's Bank of China extended that deal again for another 3 years. So that deal, so the status now is that deal is still there up to 2024. Have we seen people use that as much as we expected that they would. My answer to that is no. And that is probably because of the trading balance between the two economies. With more of that, more people import from China than China needs the naira, and so you don't see that the relevance in that sense for most people, because what would happen is that we keep, if the Chinese keep swapping for the naira, they just have too much naira to stop with themselves, and so the balance of trade between both economies is not necessarily even. So the utility of that instrument has not really been great. But whether in terms of its status, it is a product that's still out there, expiring again in 2024, hopefully, if it gets extended and we see an improvement in terms of trade between both economies, it will be something to key into again.
Yeah. Okay. I hope that answers the question. Next question is from Patrick Ene. The performance-based grants from the World Bank are denominated in US dollars, but the developers who benefit from grants are paid in naira, causing a sort of mismatch. Why is the structure so? I can certainly speak to that, but Ayo, you can also speak to that. Ayodeji, you want to take this question?
Okay, yes. So now the structure has been like that because at the beginning of the design of the program, the World Bank, the central bank pushed back to say that they're not able to do the disbursement in USD. And some of us in the industry have been pushing for it. And I think for the next program we're having is going to be paid in USD. Yeah.
I can also speak to this, Patrick, to quell your curiosity. Basically, Central Bank of Nigeria said that we will keep dollars for our own use and will only disburse this grant in naira because we have shortage of dollars and we have excess of naira. So we will only disburse naira. That's a position they took, like it or not. There's the Central Bank of Nigeria. But they have since also realized the type of problems it creates for the sector and the importers. So as Ayodeji just mentioned, the plan is to change the disbursement currency from naira to US dollars going forward, which I think will massively help the developers because they can now use that USD to import solar equipment. I hope that answers your question. Next question from Busaya Aliyu. How viable is private investment in mini-grid projects in rural communities with slow economic activity and low buying power amidst current high inflation and fluctuating FX rates? This is straight up your alley, Ayodeji. You want to take this?
Okay. It's always, most of the time, people just believe that the people in the local communities have terrible buying power. They forget that they're into agro products. And if you have 30 liters of palm oil, it's a particular great value in the market. So the truth is they've got some great, they can afford it because right now we are doing investment in mini grids in the local communities is not a fresh thing. There is an alternative. It's either they're using kerosene lantern right now, or they're using candle, or they're using petrol generators. And if you're on the smallest generator right now, you're running at 433 naira per kilowatt hour with the new petrol price. If you're on candle, you're running at about 85 naira. If you're on lantern, you're running at about 97 naira. So whichever way you're trying to run right now, the price and the tariff that the mini grid is charging is below the petrol you want to run. So they have an alternative that they've been running on before, which we are replacing. What has been happening is most of the investors who wanted to go into the mini grid sector have been short-term investors, like we have more in Nigeria. If you want to do mini grids for profitability, set your mind for break-even at 8 years. And that's it.
Okay. Busayo, I hope that answers your question. All right, we have another question here from Mr. Kunle. Many thanks for this webinar, quite informative. Please, I would like to know the stakeholders how the stakeholders are lobbying the government to get a policy formulated and implemented on getting various duties reduced or eliminated on renewable equipment to stimulate demand. What is the progress of this lobbying, and is there light at the end of the tunnel?
Oh, yes. I think I'll just take that straight because it's directly to the industry. So, yeah, we have what we call the advocacy working group within the Renewable Energy Association of Nigeria. We've got some of our members also who are connected to the legislative, to the executive, and to the judiciary. So we're across the whole tiers of the government, we're pushing. We've been pushing this before, but we had a new change in government. So we're continuing to push from the National Assembly and also from the executive. There will be light at the end of the tunnel. We've had policies that are in place to make this happen, but we've been having some pushback from the Nigerian customs based on their push to generate revenue. So they're saying if your industry is growing right now and is presenting a potential for revenue generation from the borders at the customs, why are you trying to tell us not to take it? And we're saying that we have greater loss in climate change and cost from the energy transition plan. So it is those two levers that we are trying to play on right now, but I believe we're going to win at the end of the day.
Okay, we have another question here from Nunes Oyelade. What are the implications of the exchange rate unification for Nigeria's external debt and international financial relationships? I think we covered some shades of this question, but maybe Desmond, do you want to answer this at a macro level?
Sorry, Piyush, what was the question again?
The question is, what are the implications of exchange rate unification for Nigeria's external debt and international finance relationships? Maybe you can answer it from external debt standpoint.
Yeah, so it's from an external debt point of view, it is for us, it's for an economy like Nigeria, it's essentially again how much FX are you able to generate from your trade. We see that OPEC, for instance, has reduced Nigeria's quota, and that would automatically impact the revenue that Nigeria is able to generate. So if you match that from a revenue point of view and the amount of debt you're able to take, is those sort of conversations that will be had in that respect. But I don't see the unification of the rate in itself impacting external debt. Is the amount of revenue that will determine what happens at the international debt level.
Right. Okay, well, I'm going to take a final question now. There's somebody in the webinar, Zach Gold, who is asking, how do you see the policies affecting the market in terms of importers importing goods into Nigeria? And there's a specific question for Anthony. Will Verto have a loan or credit option for users so clients can pay suppliers like my UK company in advance of imports? Two questions. Let's take them one by one.
I probably can take those.
Yeah, please,
yeah, I think the first one, how the new policy will affect the importers or retailers of importing, is that what he says? I would say definitely in the short term, there will be economic pain for those importers because it will take some time for the new policies to take effect. I know that the CPI will be driven higher primarily by the increase in the fuel prices. Everyone knows how bad it is for consumers right now when it comes to the price they're paying for the fuel. And the impact of that new announced 650 million fiscal stimulus as well will take some time to actually fit into the economy. So if you kind of combine all of that, the short-term answer is yes, there will be potentially negative impact on the importers of your goods and services, because certainly people that maybe used to try and get some of those effects in the ironing window at a lower price than it is today, they have to pay double. I think someone mentioned that earlier. If not double, they're basically paying 50% more than they used to pay. In the long term, I think it will be positive, as we already said on this call, if some of those fiscal policies actually take effect and they are properly implemented. But that's a long-term view that can take a while.
Yeah.
On the
okay, well, I'll have to stop here because the second part of the question is actually more a business question. I'll encourage you, Zach, to reach out directly to Verto, and they might have a solution for you. But we've come to the end of time for this webinar. So first and foremost, thanks to all the participants for making it convenient to join this important discussion and raise your questions and then try to unpack the situation with us. Similarly, thanks to all the expert panelists who between them have tons and tons of knowledge on the subject, and we were fortunate to have benefited from their knowledge and experience today. I think the summary is that we are emerging from an extremely difficult phase when inviting foreign investment or importing equipment into the country with the prevailing exchange rate mechanism was actually extremely difficult and almost business stopping. We heard a startling statistic from Ayodeji, the president of Rayan, that the industry is only 10% as far as it possibly could have been had these problems not existed. But there is a silver lining. The silver lining is that the changes are happening. There is an immediate pain to go through because the change in exchange rates cause an immediate restatement, which makes all the balance sheets of developers unattractive, creates volatility in the market because there is still uncertainty. That said, the medium to long-term view from almost all the participants and experts is positive. So I suppose we should just sort of tighten our belts and keep rolling as an industry. Once again, thank you everyone for making it convenient to join today's conversation. We look forward to hearing your feedback and organizing similar discussions. Thank you very much. Bye-bye.
Thank you.
Thank you.
Thanks. Bye.